Hello everyone, we are the Group 12 from 3.2 BSBA FM. And now, we are going to tackle about the cost value profit analysis. Next slide please. And for our agenda, we will talk about the definition of cost volume profit analysis and its importance of cost volume profit analysis, cost volume profit analysis formula, benefits, limitation, and also the final thoughts. Next slide please. Let's talk about first what is cost volume profit analysis. Cost volume profit analysis is also called CVP, looks at the impact on the operating profit due to the varying levels of volume and the cost and determines a break-even points for cost structures with different sales volumes that will help managers in making economic decisions for the short term. CBP analysis can predict the business profit for given situation and will know on how many products they will need to sell in order to break even the cost of the product operation. Next slide please. The importance of cost volume profit analysis. First, helps in determining the level at which all relevant cost is recovered and there is no profit or loss, which is also called the break-even point. Second, helps decision makers understand the effect of a change in sales volume, price, and variable cost on the profit of an entity while taking fixed costs as unchangeable. Third, helps in understanding the relationship between profits and costs on the one hand and volume on the other. Fourth, useful for setting a flexible budget which indicate costs at various levels of an activity. And lastly, also helpful when a business is trying to determine the level of sales to reach a target income. It means it will help you to determine the viability of your business and make a plan to reach your business goal profit. It also helps you to set the selling price based on the company's profitability. In the next topic, we'll discuss of my group mates named Veronica Gutierrez. Next slide, please.
The cost volume profit analysis formula ay they use this cost volume profit formula to see how many units they need to sell to break even or cover all costs to reach a certain minimum profit. So as we can see, makikita natin ang cost volume profit analysis formula which is number of units sold times price per unit is equal to number of units sold times variable cost unit plus fixed cost plus profit. Tignan natin ngayon yung example number 1 para mas lalo tayong malinawan kung paano nga ba ginagamit ang cost volume profit analysis formula. XYZ wishes to make an annual profit of 100,000 from the sales of appliances. Details of manufacturing and annual capacity are as follows. Production capacity is equal to 10,000 units. Fixed cost is equal to 30,000 units and variable cost per unit is equal to 30. So, ang kukuhain natin dito is price per unit kasi nag-annual ang XYZ na magkaroon siya ng profit na 100,000. So, the first one is number of units sold is inyong production capacity which is the 10,000 times price per unit is equal to number of units sold times variable cost unit which is the 10,000 times 30 close parenthesis plus which is the ilalagay na lang natin yung fixed cost na 30,000 and then the profit which is given naman na 100,000. And then i i-multiply natin yung number of units sold times variable cost per cost unit. So 10,000 times price per unit is equal to 300,000 units. Yun na yung sum ng minultiply natin na number of units sold times variable cost unit. And then, plus na lang ulit, ibababa natin yung fixed cost which is 30,000 units and then yung plus profit na 100,000. And then, after that, i-add natin yung sum ng number of units sold times variable cost unit plus fixed cost plus profit, which is 430,000 yung kinalabasan niya. So, para makuha natin yung price per unit, ang gagawin natin dyan is i-divide natin yung 430,000 sa production capacity, which is the 10,000. So, 430,000 divide 10,000 is equal to 43. So that the the price per unit comes out to 43, which implies that XYZ will have to price its product in 43 and need to sell 10,000 units to achieve its target profit of 100,000. So, ibig sabihin niyan, yung $43, yun yung magiging price ng kanyang product at kailangan niyang makabenta ng mahigit 10,000 para magkaroon siya ng profit na 100,000. Next slide, please. Dito naman tayo sa example number 2, which is meron na siyang break-even, merong number of units sold, variable cost per unit, and the contribution per unit. So, example number 2, ABC Limited has entered into the business of making electrical fans. The management of the company is interested in knowing the break-even point at which there will no profit or loss. Below are the details pertaining to the cost incurred. So as we can see, ang break-even point is dapat ang kanyang cost at ang kanyang income ay mag-equal or dapat mas mataas ang kanyang income kaysa sa kanyang cost para malaman ng isang kumpanya kung nagkakaroon ba sila ng net gain or net loss na sila. So, total sales revenue of the company is 300,000 units. Tapos, ibinebenta nila ang kanilang fan ng 300 per fan. $300 per fan. Tapos, yung variable cost, which is the 240,000 units, while the fixed cost is 60,000 units. And then, the maximum capacity is 14,000 units. So, paano natin makakuha yung number of units sold by ABC Limited is i-divide lang natin yung total sales revenue, which is the 300,000, divide natin siya sa selling price per unit, which is yung magkano niya binebenta ng isa yung kanyang electric fan, which is the 300. So, 300,000 divide 300 is equal to 1,000 units. So, yun na yung units na naibenta niya. And then, variable cost per unit, kukunin naman natin yung variable cost per unit is variable cost divide the number of units sold. So, since nakuha na natin yung number of units sold na 1,000, i-divide natin siya sa variable cost, which is 240,000 divide 1,000 is equal to 240. So, mayroon na tayong variable cost per unit. Ang kukunin naman natin ngayon is contribution per unit. So, selling price per unit minus variable cost per unit. So, ang selling price per unit natin is 300 per fan. Minus natin siya sa variable cost per unit na nakuha natin, which is the 240. So, ang kakalabasan niyan is 60 per unit. And then, pag kukunin naman natin ang ating break-even point, it's equal to fixed cost over contribution per unit. So, ang kanyang fixed cost is 60,000. And then, yung nakuha nating contribution per unit is 60, which is 60,000 divide 60 is equal to 10,000 units. So, the ABC Limited need to sell 10,000 units of electric fans to break even at the current cost structure. So, ibig sabihin, kailangan niya makabenta ng 10,000 units para malampasan niya yung break-even point niya or para ma-achieve niya yung goals niyang profit. And that's all. And the next reporter will Rhea Capatoy.
Benefits of cost volume analysis. Profit planning. The CVP analysis can help the companies to create the best and most profitable combination of cost, price, and sales volume. Thus, it can help managers to calculate and estimate their profit at different levels and for different range of products. Future forecasting. By using the above-mentioned models, approaches, and graphs, managers can analyze the direction in which their company is moving, and this analysis might help them to better understand the different operations and activities within the organizations. Last, risk assessment. Managing risk is too significant for any business because it tends to define all the procedures and practices involved within an organization. Next slide. Limitations of cost volume analysis. CVP analysis assumes fixed cost is constant, which is not the case always. Beyond a certain level, fixed cost also changes. Variable cost is assumed to vary proportionately, which doesn't happen in reality. Cost volume profit analysis assumes costs are either fixed or variable. However, in reality, some costs are semi-fixed in nature. For example, telephone expenses comprise a fixed monthly charge and variable charge based on the number of calls made. Next slide.
And for our final thoughts, no business can decide with accuracy its expected level of sales volume. CBP analysis helps the business in determining how much they need to sell to break even. No profit, no loss. CBP analysis emphasizes sales volume because in the short run, most of the estimates such as sales price, the cost of materials, salaries can be estimated with a good level of accuracy. And it's a very important management accounting tool. That would be all po. Thank you.